What's up, investors? It's the Russian dude. In today's short video, let's talk about the possibility that during the next Federal Reserve meeting, another rate cut of 0.5% might happen, which now seriously allows us to think that, well, looks like something does go wrong, what Feds know but they're not telling us about, because, I mean, one cut of 0.5% was already concerning, but, well, maybe okay, maybe it was long awaited, long overdue, okay, but two cuts in a row of 0.5% means that the Feds, they want to cut rates as soon as possible for whatever reason. The initial thought came after seeing this graph, which shows the probability of the rate cut in the remaining months of 2024 to be cut at 0.75%, excluding 0.5%, which already happened. And well, most likely we're gonna see two more cuts, one most likely in November, another one maybe in December. And well, one of them, it simply has to be 0.5%. And well, as you can see from this graph, once again, the probability of this happening increased significantly recently. Even huge financial institutions and institutional investors, they also see the possibility that the rate cuts will start going down a little bit faster than previously anticipated. Right here, for example, on the next graph, you can see the rate percentages estimations by these major corporations, and almost all of them, they predict that the rate cuts will go almost vertically down. Which brings us to the original problem of this video, whether something is going wrong. Whether they see that the inflation might be getting a little bit out of control once again in either directions, or most likely maybe the problem here is the labor market, because it is not as under control as Feds expected, so maybe they try to kinda boost it with lowering the rates, or maybe simply helping corporations, companies which rely heavily on borrowed capital to stay afloat, not to let a lot of new bankruptcies to happen, which also, if you remember from one of my previous videos, we're also seeing right now a surge in corporate bankruptcies. In one way or another, the sign of another potential 0.5% rate cut is pretty concerning, to say the least. It will be a total of 1%, entire 1% cut within just a couple of months, which definitely should signal the markets that something is about to be broken or something already broke, so investors, market participants should be extremely careful about making their future further investment decisions. After all, according to this next graph, a lot of market recessions, collapses of the financial systems in the past in the US happened whenever the inverse yield curve was starting to go down. Basically, whenever investors were anticipating long-term risks not to be as potentially strong as short-term risks. In very basic understanding, it means that something, at least market participants expect, that something will happen probably in the near future. Well, just make your own conclusions. As always, I just present you with the facts. Be careful about investing your own money. This is a food for thought for you guys. And let me know down below in the comments whether you agree with this all or not. And as always, thank you so much for watching. Like this video, subscribe to my channel if you enjoyed today's episode, and see you tomorrow.